Welcome, everybody, to the June 2025 WITI LinkSV session. One of the attendees said it's halfway through the year, but I think we're only 5 months in, so we got to slow down because a lot could happen in this last month until we're halfway through the year, right, Don? Um, Exciting stuff, I think. I read the newsletter this week, so there seemed to be a lot of action at the LinkSV newsletter that I read religiously. So, Don, I'm going to send it over to you.
Thank you so much, David. Yes, this is a really interesting month we'll be talking about, and June is going to be even more interesting, I think. So this is the first month, actually, David, since we've been doing this, that I can think there is more to talk about with acquisitions and exits than with fundings. So that is a real milestone. At any rate, let's take a quick look. This says April. Shame on me. Wait a minute. I on. Yes, I am. Okay. Well, I've got the wrong title on here. Anyways, so 7.2 billion last month, down a little from March, but still a lot of money going out into less companies. We started off the beginning of the year with a real flurry of investment. It took a hit, we believe, because of the uncertainty, the tariffs, the everything that's going on. Investors don't like to place bets when there are unknown factors involved. So that seems to have made a difference in the last 2 months. We're at 7.2 billion now. We're at 82.7 for the year. Last year we hit 90 for the entire year. So, David, I expect that when we come back next month, we're probably going to be close to 90, if not over it.
Nice.
And it's interesting, if you check the trend line there, we're closer to 2021 than we are any other year. And 2021 was it was froth, and it was a lot of lack of due diligence and investors in zero interest rate times, just fear of missing out, putting money everywhere. So we've gone way past that. Last year was one of the slowest years we've hit. And maybe we are on the upturn now. And critical to that, as we'll get to, is exits returning. IPO market and acquisitions have been very, very skimpy for, I think we're going on 2 full years now. So, take a quick look here. Interestingly enough, we're continuing the trend I mentioned last time, which is the investment in pure play AI is not overwhelming all other investments. There's still money going in. We're talking, $1 billion here. But what we're seeing is the vertical AI and horizontal AI. And when I mean horizontal, I mean workflow related, enterprise related, without getting into a particular vertical. But there's lots of activity in verticals in AI. There is customer service, there is legal, there is support, there is coding, to mention 4 of the most prominent. So you see a pretty even split, actually, here between the AI, fintech, which is making a resurgence, the software, and biotech and medical. And that pretty much aligns with where we see the big mega deals going. So you look at, of course, LinkSV, we're talking close to $1 billion in funding for them. But all of the coding companies have brought in incredibly large funding rounds, and usually multiple of them. As we'll get to later, there's an acquisition run going on those companies. So we'll talk a little bit more about that.
And Don, that Series G from Rippling, we rarely see Series G, and I guess that Adipar, right? I mean, is it
Yeah. I mean, you get Rippling, you get Adipar, you get Databricks is another one. But this is all a symptom of there being no realistic exit that will that will yield them the valuation that they got way back when in 2021 for most of them, 2022 for a few.
right?
Um, and without the IPO market being robust and back, what do? You just go back for more money and you have a Series G and H, and we even saw a Series I a few months back.
Wow.
So again, here you can see the spread of vertical AI, horizontal AI. You've got Grammarly, you've got ClickHouse. I mentioned that Rippling is making, or that FinTech is making resurgence. FinTech was very quiet for the last year at least. This year, a lot has returned, and a good portion of that is due to the resurgence. This is Michael's Web3 of Web3, and even more prominently crypto. We'll get into an IPO, a very large IPO in crypto in a bit. So
Well,
one,
I was going to ask Don, do we see a bump? Do we see a bump? Because Bitcoin 25 was 2 weeks ago, I think, or yeah, 2 weeks ago. Do we see a bump because of that? I mean, that was a pretty big name conference. I didn't know if we saw any movement in the industry because of that.
I can't point to anything in particular, David.
No.
Nothing in particular. The trends are certainly pointing in the uh, I've read it referred to as cryptomania, which is probably overdone on the emphasis side. Uh, the one company here that caught my eye was Atlas Data Storage. They are actually building storage based on DNA. So data in DNA, that's a rather interesting idea. They've put out very little about it. It'll be interesting to read when they're willing to disclose a little bit more. Okay, oh, let me, this way. There we go. And in keeping with what I mentioned on AI, pure play AI, we're seeing fewer individual fundings in the pure play and a lot more in the agents and the applications. Um, the word agent right now is probably the most grossly misused word around the AI arena. All of these companies are doing something around agents, and most of them in a particular vertical. You're still getting a few tools out, and you still have Fastino as an example. Not LLMs, TLMs, task learning models. So more on the, let's take the LLM, let's make it smaller, let's make it faster, let's make it more dedicated to something that is good for my company. And we've talked about this many, many times. 1.8% is primarily due to there being no large later stage fundings in women-led companies this month. The largest funding that went to a woman-led company was 42.5, after that 25 million. And when you put that against 7.2 billion, it just doesn't add up. So we need more women CEOs, we need more women VCs. Keep populating and it will eventually increase. There were 3 women-led companies I wanted to highlight. One of them, and we see relatively few women leading AI companies. Maithra Raghu over at Samaya AI. And on the other side, biotech. This is a two-time founder. And as a two-time founder, you're much more likely to get funding, even going into something that is relatively unknown. And the third one there, Barrett. Again, this is more, call it horizontal AI rather than vertical. It's looking at customer success. How do you take and demonstrate to every customer that where they are on their journey through your software is of value, is of more value and increasing value to them? I ran across this and wanted to add it. Many times when we're talking to outside groups, we get asked why we would choose to track just Silicon Valley. And there's two sides to that. One is it's the area we know, we love, we've lived in for decades. Um, it is also the overwhelming majority of venture capital that is being put out there is being invested in the Bay Area. And that has been traditionally true. COVID changed things. After COVID, it started to spread out because VCs all of a sudden realized that not only could they invest in someone they hadn't met in person, they had to because you couldn't meet with people in face to face. That changed things. Then we had AI come in, and you see a concentration of capital back into the Bay Area due to AI. There's something along the line of 40% of AI investment dollars solely into the Bay Area. And while here in the Bay Area, we see headlines from different entities talking about how people are leaving and people are moving there and here. Well, in actuality, for instance, Austin, we now have people moving back from Austin because Austin isn't the tech center they had hoped it would be. Doesn't provide either the community, uh, the intellectual additions, the schools, the everything that it takes to start and run a company successfully. And of course, networking. Networking is absolutely key to the Bay Area. It made us from the beginning, and we are still pretty unique, I think, in the way we do it. So, as of the first quarter, 58, is that 58? That's pretty hard to read. Just under 59% of VC dollars went into the Bay Area. Closest after us is about seven and a half in New York. Interesting breakdown. I've shown you this before, and I'm not going to have a new one until the end of June when we get a half year. But this is really interesting, followed by this. So we've talked before about how the lack of exits, no IPOs, no acquisitions, or low acquisitions, not a lot of cash acquisitions, has dampened, shall we say, the funding environment. Uh, when LPs don't get their money back, when VCs don't get their money back, there's just less to go around, and there's hesitation to move forward on new investment. So the first quarter of 2025 brought in about a third of what the full year of 2024 brought in. And this is now countrywide. We're going to talk specifically Bay Area in a minute, but there was a notable uptick in acquisitions and a couple of IPOs in the first quarter. Now let's get specific. So May, we saw 10 acquisitions. Now, these are acquisitions that they're willing to announce how much they're for. A lot of acquisitions, they just don't. Someone has been acquired by someone and it's undisclosed amount. And actually, in May, we saw 51 total acquisitions. Only 10 of those were disclosed amounts. But for those 10, 26.8 billion, just under 27 billion in the transactions. Now, let's compare that to a year ago. A year ago, same time period, 23 transactions, 6 of them disclosed for a total of $3 billion. So big difference. Now, the other thing that's at the end of May, this had started to happen. I got to talk a little bit about June because we're already in the middle of it. It's happening more. We've now had 1, 2, 3, what would be termed reasonably successful IPOs. One of them wildly successful right now. Hinge Health and Omada Health both came out. Hinge Health above what they had projected, Omada Health in the middle. They both raised at least as much as they wanted to. Chime is now starting their roadshow, and that'll be the first fintech that of Plaid, of Chime, of Stripe that are all sitting back waiting for the right time. Now, Circle is not our company, but I gotta talk about it because they did their IPO, was it yesterday? They first priced higher than they had anticipated pricing. They came out almost twice that much on the initial trading. And by the end of the day, they'd bumped up 168, close to 170%. It is a crypto play. There was apparently lots of volatility. They stopped trading a few times, but right now, that's what we would term a successful IPO, and it's the first crypto IPO. Well, you go back to Coinbase, and Coinbase was actually not this kind of IPO. They did a direct listing. So you got to go way back to get to a crypto, and I don't even have that company and time. So this is the first IPO for the crypto community, and we'll see where it goes from here. For all the other companies, they're continuing to do tender offers to offer their employees the chance to sell some of their stock to get some cash back, to quite frankly tamp down the push to go public, because they're not ready to go public right now. If things keep going in the right direction, we should see some of them move towards that. Okay, so what we've been talking about today is all information that Bob and I, and Bob's here now, gather as part of doing our reporting on Silicon Valley, Bay Area, Northern California, funding, investors, LPs, startups, entrepreneurs, and M&A and IPOs. Let's see. One of the big differences between us and Crunchbase is that everything that goes into our database is curated. We check it out, we know it's true before it goes in there. We certainly have automation, but we do not depend on that for pulling together the accurate, the timely, the critical details. We do alerts for companies and people that would like to be immediately notified of events such as funding, hires, job hires. We have an accelerator program that we do in conjunction with Skydeck, with Bronco Ventures, and it's open to other accelerators as well. We've just started a new podcast series, Legal Foundations. We'll be posting some information on that later this month. And I wanted to remind everyone that we now have an entrepreneur membership that's just $7 a month. And if you're part of Skydeck, you got lots of mentoring, you got lots of resources. But if you're not, and you're not in an accelerator, you got a lot, particularly first-time founders. You got a lot to learn, you got a lot to get under your belt, and we've got a lot of resources to help you do that. And on that note, I think I'll turn it back to you, David. And we'll next July 11th, the 4th is a Friday, first Friday.
Right.
Thank you, David.
Amazing. Done. So much happening, right? And I guess in AI time now that we're kind of really into it, getting to last year's number by July 1st probably makes sense, right? 2x last year, and it's just gonna really grow fast now.
It,
Um,
it all depends on whether things stay calm, calm and
right.
known. So we shall see.
Interesting.